Hello, my name is Roy Phelps and I'm here today with Bevan and Buckland Chartered Accountants partner Harry Lloyd Davis to look at the issue of how to work out what a business is worth. Harry, it's good to see you. Tell me, a common question most business owners ask themselves is how much is my business worth? Is there a way to work it out?
It's a very good question, Roy. The simple answer is, as with most things in life, it's worth what someone's willing to pay for it. But with business valuations, there are a number of different methodologies you can use to help you get a good indication as to what the business is actually worth. And depending on what type of business it is, it depends on which valuation you use. But the most common one for a trading business is you will look at how much money it makes every year, its profit, and then multiply that by a number, which is normally the number of years that someone who's coming to buy the business would want to get their money back in. So you multiply it by a number, which is normally the number of years profit that they want to buy.
Right, thank you. So how many years profit will people typically be willing to buy then, Harry?
Yeah, no, well, I think that's a very good question, and it's the next step in the valuation process, and it's probably the most difficult thing as well. And the number of years is affected by a very wide range of factors, but essentially it comes back to how much risk is there within that business. Because buying a business is an investment like many other things. Now, if you were to put, let's say you had £1 million and you were to put it into the bank, you would hope that that money is pretty safe, and so you're willing to accept a fairly low return on that income, maybe just 3, 4, 5%. But if you were to spend that £1 million instead on a business, that's a far riskier place to invest your money because the business could go bust or sales could drop significantly or profits could fall. So people typically want a far higher return on that investment. And so, for example, if you decided you wanted a return of, let's say, 20% on your £1 million, that's the equivalent essentially of trying to buy out a business over 5 years. So you'd say, right, I want to spend, if the profits are £200,000 and I want 5 years return, that makes that business worth about £1 million.
Clearly this is a very important subject, particularly if you're a business owner. Can you use the profit figure in the accounts or do you have to adjust it?
You do sometimes, in fairly rare circumstances, it has to be said, able to use the figure that's in the accounts as it is, but in most circumstances you do need to adjust it. And the adjustments will be for a number of issues, but typically in an owner-managed business, one figure which is often not always fully, the correct figure is directors' salaries. Because very often directors will pay themselves a very low salary for tax purposes, or in other examples will pay themselves a very high salary because it's their business and they can do if they want to. So that's a common example of one of the numbers you need to adjust. Another one is that you have to remember you're buying future years' profits, and so there may be a one-off or odd expenditure in the last couple of years which is being used as a basis for the profit, which you need to adjust for. A common one, for example, might be a big bad debt which is unlikely to reoccur every year, so you'd add that back to get a more accurate profit figure in the accounts.
Are there any other factors, priorities that we need to consider? Yeah,
selling a business and valuing a business is a complicated process. And an example of some of the other factors would be surplus assets. So very often a business, particularly one that's been running for many years, will have built up a stock of cash essentially that it may not have distributed to its shareholders. And it may not need all of that cash for the day-to-day running of the business. So that cash is a surplus asset and would increase the overall valuation of the business. Another common issue which you come across is the valuation of some of the assets in the accounts. So it might be a company, for example, owns a building which it bought 30 years ago. Well, that building might be in the books at its cost, whereas today it might be worth 2, 3, maybe 5 times as much as what it was originally bought for. So those are the other sort of factors that you need to take into account. In reality, if you're looking to sell your business or looking to have your business valued, it's always worth trying to get some professional advice. As you said, Roy, just making a very small mistake, can actually cost you tens, if not hundreds of thousands of pounds. And in addition to that, professional advisors will normally be able to help you not just value the business, but give you tips on how to improve the value of the business and also give you advice on how to make sure that you do it in a tax efficient way so you don't end up having to give too much of what you've just managed to earn through selling your business over to the taxman.